Yeah.
Coincidence.
Yeah.
Coincidence.
Yeah.
Coincidence.
Something that happens by chance, I think not. Hello, and welcome back to Save Me Expand. Today's video, as promised, is going to be about the Footlocker stock, why I recently bought back into them, and why I believe that there's two plays that anyone can make here. One is to swing trade, and I'm going to explore the reasons why I think that. Option 2, to strengthen your dividend play and add Footlocker for the long term. Before we get into it, I just need to remind everyone I am not a financial advisor. Yes, I've had some recent success. I've only really been stock trading for a couple of years, but as a quantity surveyor and a previous property developer, I do have an idea of how money works and understand yields, and I do understand the benefits that I can give people from this YouTube channel. So if you do like it, please subscribe, please hit the like button. We're trying to grow this bitch, and I need everyone to help out. Thanks very much. Without further ado, let's get into it, baby! Alright, so for those who don't know Footlocker, they are a global brand, okay? One of the biggest brands known for providing footwear across the globe. With some of the best brands in the world on their books, affordable prices, next day delivery, they offer a great online retail service. Also, they have multiple stores all over the world. With the breaking news on Monday of a COVID vaccine, we're noticing a switch from safe havens, from the big tech, the Nasdaq, overperforming stocks, switching back to the more traditional stocks. And I feel that Footlocker not only were throbbing with the online sales, I feel that with this switch, they're covered in that sense too. I will have a new video coming up about my current thoughts on the state of play and what I feel that maybe the future will look like with this transition or non-transition, so it may be. But that being said, I think Footlocker is safeguarded by both the online presence, and if there is a switch over to the retail sector, I think Footlocker will also gain. As I previously said, I've recently opened up my position in Footlocker again, and as you can see, my current average price sits at $37.15, where the market actually closed 1.43% down, but I'm still up at $39.18, a return of almost 5%. So far so good, happy enough with the return. However, the reason why I'm doing this video and the reason why I was talking about swing trading is for the simple fact that earning date is on the horizon. Footlocker's earnings are scheduled for the 20th of November, which is exactly 9 days from now. I believe leading up to this date, you will see rises in Footlocker stock. The 10th of November, Footlocker closed at $39.16. As you can see, the after hours, they were up over 0.25%. When looking at the 52-week range, they had highs of 46.74. So looking at our price now, you can see that there is room for growth. In my experience of playing the earnings, and I do believe that there is a way to play the earnings, if you buy a stock that you believe is going to do well at earnings date, if you can get in there, ideally 2 to 3 weeks beforehand at a decent price, you can honestly get a rise right up until earnings, and at some stage throughout it you need to make the call to sell, but it will be at profit. Our more recent report backs up my more positive thinking of Footlocker as we move from this transition to online, which I think they're doing extremely well with. An 8% rise year on year, and with sales growing by 17% to 208 billion. I suspect based on this, most people will think the earnings will be good come November the 20th. Of course, if you think the earnings are going to be great, you can wait till the earnings day to pull the plug, but in my experience, the day after earnings day, a lot of stock gets a bit of a pullback. So this is something you need to consider if you're thinking about going down the swing trade route. So that's the option of swing trading. The other option that we can explore is the dividend. When reviewing a stock, it's important, even at a high level, to look at previous year's growth charts. I think it gives an indicator of where the company is going. Not the previous performance is an indicator of where we're going to go, but it gives us an idea. If you look over the charts of the last 5 years, Footlocker is actually down 36%. This doesn't show great growth. However, there is the transition from retail to online, which I think Footlocker have done very successfully. If I was doing a dividend play, I would only be looking for the next year's dividends. Due to the global pandemic, many companies cancelled their dividend payments. However, back in August, after only missing one dividend payment, Footlocker has reinstated their payment. For a company to reinstate the dividend after just one missed payment shows that it is in good standing. And not to reiterate my previous points, but with the coronavirus news and perhaps this switch back to retail stocks and with their current online presence, I believe that Footlocker can be a long-term hold and you'll be picking up nice dividends along the way. The most recent one being paid on October the 15th at 15 cents a share. For most stocks, I tend to have a plan B, whether it be just a case of buying the dips, day trading, swing trading, long-term trading. My intentions with Footlocker is to try and swing trade it, hopefully get a nice return. I will wait and see how this whole coronavirus retail switchover plans out. And if worst comes to worst, if any uncertainty comes into the market, if the market was to somehow crash, I have no problem holding Footlocker for the long term, as I like to have a dividend play and I believe in the Footlocker stock. It's important to always keep an eye on your dividends. For me, dividend play is year to year. I don't think too long term on my dividend plays. I really don't. I will always assess them year on year. And you need to keep up to date on how the progress of those stocks are doing. It's like when your home insurance quote comes in, you shop around to get the best price. Well, I like to shop around every year to get the best dividend price. So every time when the ex-dividend date rolls around, I'm making sure that I am happy with sticking with that stock, or I have already lined up another dividend payment stock to move on to. Well, that's another video wrapped up. I hope you enjoyed and found this video informative. If you do like the video, please hit the like button. Always hit subscribe for more content, and I will be doing an update video around the earnings date in a couple of weeks time, just to let you know how my moves are planned out and what my steps are going forward. And thanks for watching.
Coincidence.
Yeah.
Coincidence.
Something that happens by chance, I think not.